Learn the smart trader strategy that was used to sell Aussie dollar and have 300 pips running in profit, risk-free with stop loss at break even on both trades. 200 pips profits running on trade number 1 and 100 pips profits running on trade number 2. Now, whenever we trade like the smart money, we always want to identify high interest levels that the banks are focusing on, because these are the areas that we are going to be looking for high probability trading opportunities. And the two tools that we use to do that are supply and demand Forex as well as Forex volume. So first we start on the H4 time frame, and what we want to look for are areas on the H4 time frame where the market pushed down with high volume for a supply level or pushed up with high volume for a demand level. The levels we were looking for specifically for these setups were our supply levels. So what you can see here is we have a level over here where price pushed down with high volume, and we are using our FX volume indicator at the bottom to show us wherever there is high volume and with the support of the price action to validate the volume that we see. Now that we have identified our potential supply level for the setup, we go to the M15 time frame and go to that level so that we can draw that level with high accuracy, because we want to see exactly what areas the banks are focusing on. So all we do is use our FX volume indicator to look for high volume spikes, which show us with high probability where the smart money was stepping in the market at that time. And this is where we draw our supply level. Click the link in the description to get the free video training where you can learn how to identify and draw supply and demand levels like a smart trader, step by step in more detail. So now we know that whenever price comes back to test this level, what we want to be looking for are selling opportunities. We want to get ready to sell because we know with high probability that the smart money is highly interested in that level. And this is a level where retail traders have highly been induced to take the opposite side of the trade. So now that prices come back to test our supply level, all we want to be doing is looking for selling opportunities. We are looking to sell while the retail amateur traders are looking to buy, because they can see price has been pushed up over here and they have been successfully induced to be taking the opposite side of the trade, which is exactly what the smart money wants in order to fulfill their objectives. As smart traders, we don't trade like the amateurs, we simply follow the smart money. So now we pull the trigger, enter the sell trade, making sure that our stop loss is above the supply level to minimize the risk of stop hunts by the banks. And once you enter the trade, you simply let the smart money take care of the rest, so you can collect them pips like a smart trader. Skibbity pap, trade number 1 in the bag, nice and easy. These are the same steps that we use to enter trade number 2. Identify our supply level on the H4 time frame using FX volume, draw our supply level on the M15 time frame using FX volume, wait for price to test our supply level. The longer the range, the bigger the breakout. Enter the trade with stop loss above the supply level, and once the trades are in profit, we move stops to break even and become risk-free. And once we are risk-free, we then trail stops to lock in profits as the market continues to move in our favor, as you can see over here. Check the link in the description to learn how to correctly trail your stop loss.
Aweh Millionaire, if you enjoyed the video, leave a like, comment, and subscribe, and hit that bell.
Batman, Batman, Batman.